guys, welcome back to the channel. This last week in the market has just been as crazy as the ones before it. Honestly, I'm not sure how to react to it. There's a lot of things going on, factors that seem to be pretty good for us, but then there's also a lot of things that are a little scary that I don't know which way it could go. The main thing on my mind is that I just got to keep to a plan that I know will work. Over time, just slowly investing money, just slowly feeding money into the portfolio and picking out good investments. And that's all we can really do, because I don't think I'm smart enough, nor is anyone really smart enough to know exactly when we're going to hit bottom. If we've already hit bottom, it's all kind of up in the air right now. So last week I did an analysis on Disney stock. It's a very good opportunity for us. And I think even with a couple of the new news items, one, a kind of a weird trade rumor that they could be bought out by Apple. I don't foresee that happening, but it had a pretty positive impact on their stock today, which is surprising to me, but I guess some investors think it's a pretty good possibility. But this week I'm going to be taking a look at Simon Property Group and doing a little analysis to see if they're a good buying opportunity right now. So unlike Disney, I don't think most people know who Simon Property Group is, because they're not very well known unless you're really into investing in REITs. So to give some context, Simon Property Group is a global leader in the ownership of premier shopping, dining, entertainment, and mixed-use destinations. Currently, they own interest in 233 rental real estate properties that, when you total them all together, make up 191 million square feet. They are also in the process of acquiring another mall rental real estate company and own equity stakes in other REITs. So what makes their properties different from other malls and other shopping centers is the quality of the space and the types of tenants that they have in their properties. So they really do just play in the very high end of the market, and they almost give you a sense of being at a luxury resort, but you can also buy things there. Going to these malls is a step up from just a regular mall trip, and it's more of an experience, kind of in the same way that IKEA is for a lot of people. Simon Property Group is also a REIT, which puts them in a special class of investments, and I'll go through a couple of the main points of REITs right now. REIT stands for Real Estate Investment Trusts, and they serve as a way for people to invest in commercial real estate properties that generate rental income. To qualify, these businesses need to follow specific guidelines, like how much you can invest in non-real estate assets, how many individual shareholders they have, and they have to pay out 90% of their taxable income every year in the form of dividends. Because of these rules, the majority of the gains made by investors are through dividends that they pay out, since the company cannot reinvest much of their profits back into themselves. Now, just like any asset class, there are pros and cons to owning REITs in your portfolio. The pros include steady dividends and diversity into different asset classes. But I think the most important one is they allow real estate investments to be liquid, which means you can sell it quickly while still getting the money out of it for what it's worth. But there are also cons, like limited capital appreciation, which we discussed just a second ago, high property management fees, and really the most important one for me is they're not tax advantaged, meaning you do not get the dividends taxed at a favorable rate, which is the case for most dividends. However, I think the safety that you get from diversifying into different asset classes is worth much more than the slightly higher tax rate imposed on the income generated. So you're probably wondering, why is Simon Property a good REIT right now? And my answer to that is their valuation is extremely attractive, since they've been beaten down over the past few years. The rationale in the market for this is that they're a mall REIT. A lot of people believe that companies like Amazon are completely taking over the world, and that in the next few decades, people will be only shopping online, and thus, malls will basically become irrelevant. And to a certain extent, these people are not completely wrong, but I think the fears are a little overhyped. I also think their properties are uniquely suited to weather the storm because they really do function as an experience and not just a place to buy things. They're also really leaning into their experience with a recent acquisition, but I'll touch on that in a little bit. Now, even after Friday's large boost to their price, they're still down 38% since the beginning of 2020, and down 60% from their all-time high back in 2016. This drop in price, coupled with their constant increases to their dividends, has given this REIT a crazy high dividend yield that now sits at about 9.5%. I also see this dividend as pretty safe because to them, the dividend payment is almost as necessary as paying down debt, which is important to note because Standard & Poor's has given them an A credit rating, which is the highest rating in their industry. In pretty recent news, Simon Property Group agreed to purchase a sizable stake in another high-end mall real estate company, with an option to buy the rest of the shares at a later date. Now, to me, this shows that Simon is confident in their business model, and they're more than happy to scoop up these high-end mall companies while the market doesn't seem to be valuing them very highly. In a recent press release, their CEO and president, David Simon, said, quote, "By joining together, we will enhance the ability of Taubman Realty to invest in innovative retail environments that create exciting shopping and entertainment experiences for customers, immersive opportunities for retailers, and substantial new job prospects for local communities." Now I'll end the discussion on the way that the current health concerns may affect the performance of this company in both the near future and the long term. To be completely honest with you, the short term looks pretty ugly for the tenants of these buildings. People do not want to go and spend time in crowded, high population areas, and in many areas of the US, large gatherings of people and events are being shut down to decrease the likelihood of spreading. However, since the tenants of these properties are signed under long, multi-year leases, Simon Property Group should be pretty well insulated from these effects. Now, looking long term, if these tenants are hurt badly enough to where they will not be able to remain open, or they can't renew their lease, Simon will probably see an impact, but I can't see it being substantial. I think many people see malls in a similar fashion to the way that they're viewing cruise lines right now, because so many people come in contact with each other when they're there. But the effects are going to be very different, since they're insulated by those lease contracts. So because of all those factors, I've decided to purchase $250 worth of Simon Property Group in my investment portfolio. With the ridiculous volatility in the markets right now, I think adding another asset class like real estate would be a really good move to try to reduce some of the volatility and the crazy swings that my portfolio could see. Also, since the goal of this portfolio is to generate some income and really get some cash flow going, the crazy dividend yield that this company has right now, almost 10%, will really go a long way to getting the dividend yield of my entire portfolio up. So now, of the $1,000 that I've invested in this portfolio, after I purchase Simon, I'll be down to $250 left in cash. I think the segment that I really want to focus next is financials, because they've also been hit very, very hard during this downturn. In the description below, I'll share my M1 Finance Pie, which has a couple different financial stocks that I'm somewhat interested in buying right now. So if you guys are interested in seeing an analysis on one of those, or if you guys have one stock that you think might be better, let me know in the comments and I can take a look at it. I think it's important that while the markets are so crazy, we don't overreact to all the swings. Thanks for watching the video, guys. If you enjoyed it, please leave a like. And as I mentioned, let me know if you guys have a stock that you want me to take a look at. Make sure to subscribe and turn the notification bell on if you want to receive the next video that I do. And I will see you guys in the next video.